As e-commerce sales have continued to rise over time, the industrial asset class has arguably become the most popular real estate product type throughout the entire industry over the last few years, but there's a specific kind of industrial property that's gained a ton of traction among institutional investors. And this type of property is referred to as industrial outdoor storage with limited supply, limited capital requirements, and potential future redevelopment opportunities, drawing a ton of investor interest into this space. So in this video, we'll talk through what industrial outdoor storage properties actually are, why these are becoming so popular, and how you could potentially take advantage of the growth that's happening in this sector right now. So let's start out by defining what industrial outdoor storage or IOS properties are, since these are very different than your standard industrial warehouse. Industrial outdoor storage properties typically have a very small number of building improvements, meaning that the majority of the square footage within these sites won't include actual physical structures, and in most cases, these will have what are referred to as building coverage areas of less than 20 to 25%. And just like the name implies, these properties are often used for the storage of things like construction equipment, shipping containers, or landscaping supplies, and also for truck or vehicle parking, with the primary value of these sites usually being tied to the land itself. These properties also typically have controlled or guarded access points, often with high security fencing and surveillance cameras, and usually include heavy-duty pavement or gravel surfacing that can withstand heavy loads. Typical tenants you'll see at these properties include logistics firms, trucking companies, last mile delivery operators, and equipment rental businesses, with the vast majority of these sites located very close to heavily populated areas. The iOS market grew to over $200 billion as of June of last year, according to PwC, and in 2024, major capital allocators, including TPG Angelo Gordon and JP Morgan, raised over $3 billion of capital to deploy specifically in the industrial outdoor sector. Now, similar to the growth in warehouse demand, the huge uptick we've seen in e-commerce sales has dramatically increased the need for last mile distribution centers, which has also made these sites that are located in densely populated areas extremely popular. And at the same time, we've also seen a significant supply shortage of these properties, since it's extremely difficult to build these due to rezoning pushback from local municipalities, and with many of these properties near major ports and highways being redeveloped into different uses altogether, this has led to huge supply and demand imbalances that have ultimately led to a lot of rent and value growth. According to research by Marcus and Millichap, vacancy in this asset class fell below 3% in the US in 2022, and rents increased by 30% from the end of 2019 to the middle of 2023, while rents in the industrial sector overall rose by only 24% during this time. All of these things together have made this sector a really compelling investment option for institutions and private equity firms, and with more than half of these sites in the US still being controlled by mom and pop owners, according to Green Street Research, this has created a huge opportunity for investors to come in, buy these properties, and then raise rents for existing tenants or release these properties to new tenants at current market rates, often with very minimal capital improvements required to make these increases happen. While many tenants do expect things like paved surfaces, fencing, security systems, and LED lighting, when compared to industrial warehouses or manufacturing facilities, these assets tend to have significantly lower ongoing maintenance costs, with fewer roofs, HVAC systems, and general building components that could potentially fail over time. Lease structures in this sector are also often triple net, making the tenant ultimately responsible for covering the operating costs associated with owning the property, which can be especially helpful during times of persistently high inflation like we saw over the last few years. What investors also really like about this asset class is the optionality that it comes with a lot of these sites acting as covered land plays, where the investor can generate cash flow for a predetermined period of time, with the goal to either redevelop the property into a higher and better use in the future, or ultimately sell the property to a developer if they want to exit the investment. This part of the industry is also one of the most inefficiently priced sectors of commercial real estate, with very little information available on this sector, even in industry research databases like CoStar, which makes this a great place for investors who are knowledgeable about the space to find higher yields and better value than they would otherwise be able to when pursuing a more traditional industrial warehouse acquisition. So if you've heard all of this and the industrial outdoor storage sector is something that you're interested in, the question from here becomes, what can you actually do to take advantage of this trend? Well, the first thing I think about is looking for job opportunities in this sector, since capital flows into a certain asset class require that capital to be deployed at some point in the near future, and acquisitions, dispositions, and brokerage talent is all going to be necessary to get these deals done. Getting involved with this sector could also present a huge opportunity to build a very specialized skill set early on in your career, and this can help you progress much more quickly than you might otherwise have been able to in a more crowded, established sector like traditional market rate multifamily or even industrial warehouses. I would also say that if you're planning to strike out on your own, a lot of newly formed firms that are targeting this sector are looking to consolidate existing industrial outdoor storage assets by acquiring smaller deals in the $5 to $15 million range and then selling these properties as a portfolio to larger private equity firms and institutions that are looking to enter the space. With the supply and demand story that's going on right now, the optionality that these properties provide, and the interest this sector has garnered from major capital allocators, this could be a really compelling place to start your career if you're looking for a non-traditional asset class with market conditions that could end up working in your favor over the next few years. Ultimately, industrial outdoor storage is one of the most interesting product types in all of commercial real estate right now. And if you're looking to land an analyst or associate role in any part of this industry, and you want to make sure you have the technical skills you'll need to make it through the interview process, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break Into CRE Analyst Certification Exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. If you like this video and want to see more content on the channel on niche asset classes like this, make sure to hit the like button to let me know, and let me know in the comments what your thoughts are on industrial outdoor storage and where you think this asset class is headed over the next few years. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.